So wanted to talk about this a little bit. You know, obviously leads, most important thing. We talk about it a lot. I want to talk about what you spend in leads, and then what do you recommend when you have a new agent spends to start out?
I usually spend about $5,000 to $6,000 on leads monthly. That usually gets me where I need to be. Depending on the month, Steve, I can spend more. Of course, if I have some good lead flows. One thing I will address with all of you guys, I don't have any mortgage counties locked out at all, which is why my spend isn't, let's say, a little higher. I've been able to get a pretty decent return running through the CRM and running instant internet leads, which I can touch on with you guys today. But for new agents, Steve, I recommend that when you're first getting started in the business, like it's important for your managers, guys, to understand what your budget is. So if we really want you to be dialing 100 to 150 brand new leads for your each dial session. Okay. So that might be anywhere from $700 to $1,000 that you'll need to set aside for your first dial session. It's really, really imperative, guys, that if you can't get to that number, that you communicate that, like maybe to Steve, like, hey, Steve, I'm a little bit short. Something I'll do is I'll try to match them. So if they're bringing in 500, right, I'll try to match that, or at least I also put some skin in the game. That way I can help them get to where they need to be. But having that many leads for your first dial session is really going to help you guys build up your confidence. And to be honest, the instant internet leads are, okay, so me and Laura, we're in New Jersey. People are very mean, like they're so mean. You get hung up on all the time. It's like calling New Yorkers. So they're really mean. And so I always prepare my team. I'm like, you're going to get your teeth knocked in, like on the phone. You just accept it, move on. They're going to cuss you out. They're going to hang up on you. You got to call them back. You have to call them, guys, 7 times in a row sometimes, but you'll get to the numbers. And when you get there, it's an entirely different ballpark. Like people are so nice, they really do want the insurance. It's just that everybody's trying to sell them something. You have to put yourself in their position. They're getting calls all the time, But getting to that sweet spot, Steve, I think is really important because that'll set agents up for 2 days with 16 appointments.
Love it. Okay. And it's good. If you get your teeth knocked in, you make so much money here, you can buy new ones. So
absolutely.
Good. You're okay.
Needed some new ones anyway. Yeah.
There you go. So now kind of coming West Coast to the East Coast, and, those that may not know, Britt, you were out in California for how long? Pretty much a long time, right?
Yeah, I mean, I've been there forever, but I sold insurance there for like a year, and then I went to Vegas, sold a year there, and now I'm in the tri-state area.
Got it. So you clearly can be successful anywhere, with the system we have, obviously.
Yeah, the opportunity here, it's just the system, absolutely.
And your lead mix, a lot of instances, like you said, what else do you use since you don't have the mortgage availability?
So you guys really want to hit the Mail Pro 1 month, 2 month, 3 month leads very hard. Set your alerts wherever counties that you guys are in, set the alerts. I just did a call this morning with Caleb, and I was telling them, if you guys set your alerts, and let's say it says, I get an alert saying Burlington County, 5 new leads are added. You guys got to buy them, guys. If it's 5 leads or 25 leads, buy them every time your alerts go off, because it's just going to add to your inventory. There's no real urgency to call these type of leads like immediately, right? Because they're already just like a little bit aged, but there's so much like gold in those leads, Steve. I cannot even tell you the crazy ROI that some of the agents have, and like I myself have experienced from that. And then like Rob said too, like one thing that you guys probably have the advantage of is you guys probably have a lot of mortgage leads that you haven't been able to touch them all, but I will buy the instant leads, and I kind of just run through the low hanging fruit, if you will. I don't really ring those leads out too much, and I give the rest to the agents. I just had a guy sell 2,600 and Eagle and Prosperity Stack from a lady that we called and she was like, yeah, I need permanent insurance and I want as much as I can get. That was off of Instant Lead, 2,600 AP, brand new agent. And I think he got paid by now. So there's a lot in those leads, guys.
Awesome.
There's a lot.
Love it. So now from an expectation perspective on those leads, how do you look at percentage wise for yourself, or like maybe an instant lead, if you book 30%, how do you look at those kind of 1 to 3 month old? Like, cause you know the drill. You hear a lot of agents, oh, these leads suck. They this, they that, the other. We all know the drill. They all work. They all suck. But if 30% on an instant lead book, what would you say is your expectation on like a 1 to 3 month old?
All right, I'm going to share with you guys a secret that's probably not a secret. I don't know if it is. The 1 and 3 month old are just old instant leads. So, and I figured this out because I literally, guys, I'm in your boat. Like, I'm in your shoes. Like, how am I going to get leads? How am I going to do 40K a month? You know, I'm behind, I'm not there. So I have ran about 7 to 8 counties in New Jersey. And I have bought the 3 month old and the 1 month old leads. Now, here's what I'll say. I feel like personally for me, the 1 month, the older leads, they pick up more, like, you know, cause I guess they're not getting called, right? So Jessica's shaking her head. I guess she had that experience. They're easier to book. And it's just a little bit of an older lead, which might be a month to, again, 3 months old of an instant lead. So if you think about this, let's say I'm in Burlington County, Jessica's in Burlington County, and Brittany, who just runs through the you know, the low-hanging fruit of her leads, there's a bunch that I'm not reaching, right, Steve? So then Jessica comes in, she buys the 1 month, and she just racks out because I didn't call him and I never went back. Does that make sense, guys? And with strategy with the instant leads, Steve and Rob, I would say, because I've tried a bunch to kind of see, I kind of want to stay away from apartments or gated buildings where it's really hard to get in. Seniors right now, especially COVID, it's very strict. They might book an appointment with you, then you're outside saying, you know, hey, Dorothy, I'm outside. And Dorothy doesn't answer, you know, so I'm wasting my time, right? So we don't want to do that. I try to look at middle income areas. So if you guys can find nice suburban areas around you, that's money, you know, honestly, because they're homes. So we want to see homeowners. They have checking accounts, and that's another reason they have checking accounts. Okay. Of course, there's ways around that, and it happens from time to time, but we don't want to be sitting 8 appointments in a day. 3 of them no show you, 3 of them have no bank accounts, and the other 2 are going to tell you no, right? So that sucks. But there's ways that you can kind of combat that. And I would say, depending on where you are geographically, you might have to hop around and try different areas to see what suits you. Okay.
Wow, that's awesome. Love it. Thank you. So now you're in home. I said to start this, you're a killer in the house. Like you just are. And I know you're very, very direct. So walk us through how you created that or got it, found it, and then a little bit of your process in the in-home.
I think, Steve, it's because my personality, you know, like, and I think I found this. I think that I've tried both, like, you know, doing the whole, hey, you know, I love your carpet. It's nice in here. Your house is beautiful. Tried that. And it's like, yeah, okay. You know, even California, they're kind of like, what are you here for? Right. So I kind of, to eliminate that, guys, I just sit down and go right into it. But one of the things that I noticed, Steve, because, you know, I've ran enough appointments by now, right? One of the things I was always getting when I was sitting with families for mortgage protection or final expense or whatever it is, they ask, so how did you get, you know, I introduced myself, hey, this is Brittany, show my business card. Now I show my state license. So I have some things, guys, I wanted to walk you through that helped me in the home. My state license is printed, you know, with all these calls that they're getting, right? Especially people on the East Coast, I feel like they're very leery of you. Like, who are you? What are you doing here? So I always start off with, I'm like, hey guys, Steve, I'm going to just start off with, here's my state credentials. So I'm licensed through the Department of Banking and Insurance through the Department of New Jersey. So they hold my fingerprints. They have all my information. I did my background screening with them, everything. You can verify my information on the Department of State website. Okay. They're like, okay, cool. You know, I'm like, how I got here in the first place, Steve. So you remember filling out this card, right? So this is about the mortgage insurance. So I kind of walk them through that, guys. Or if it's a Facebook lead, now you remember you went online, filled out this information to take care of your burial in the event that, you know, we don't want to leave a burden on your family. That's why I'm here for. So if you hadn't have filled that information out, Steve, I wouldn't be here. Okay, fair enough. So yeah, okay, you know. So now they're like, all right, I know how she got here. Now, who is she, like, who does she work with? This is all kind of what I play out in my head, right? So, you know, Steve, I'm a licensed underwriter through the state. I'm also a broker. As being a broker, I work with about, 15 different A-rated insurance carriers. They've been in business over 100 years. I'm sure you've heard of a lot of these carriers, right? Show them the thing. They're always going to point out, guys, oh yeah, Mutual of Omaha, Transamerica, AIG, all the main ones, right? I'm like, Steve, like, the great thing about these carriers that I partner with is that they're A-rated. Now, sometimes, guys, people don't know what A-rated means, and I compare that to like going to a restaurant. I'm like, Steve, have you ever gone to a restaurant and you see a C rating on the window? Like, you would never eat there, right? So these are all A-rated, like, vetted companies that I work with. So when we take an application today to see if we can get you approved, it's going to be through one of these companies. Is that okay? Love yep. That. So Steve's shaking his head a lot. That's what you guys want, guys, the tie downs. Initially I don't know. I don't think I was that strong in the house, honestly, guys. So it's just through trial and error. I'm trying to like tie them down, Rob. Like, I'm not like Rob, right? I've seen Rob's in home and I'm like, wow, okay. I need their constant solidification that they're with me, that they understand. Okay. So how did I get there? Who am I? Who do I work with? Now, the last thing is, what are we going to do today? Okay. So, you filled out this form. We went over that. So what I'm going to do, Steve, today is I'm going to ask you some questions about your prescription medications. I'm going to ask you some questions about health history, and I'm going to ask you guys some questions about your income. That's probably the most important piece for me, Steve, because not only does mortgage insurance obviously protect the loan in the event something happens to you, no one's stuck with it, but mortgage insurance also acts like income replacement. Okay, so I want to really understand your situation here, Steve, with you and Margot. So if she were to lose you first, what does that look like financially for her? Can we replace a portion of your income for years to come, or vice versa? So it's really important, Steve and Margot, that I understand that, because that'll also further help me recommend a program, a plan that's gonna fit your budget, right? Because if it doesn't make sense in the budget, it doesn't make sense to do this today. Am I right?
That's right.
Right. So everybody says yes, guys. When you say that, okay, I'm gonna address the money thing right up front, I feel like they get more relaxed. They're like, okay, she understands, like, she's not just gonna throw a big plan on us that we can't afford. All right. So after I do all that, Steve, I'm like, are we good to proceed? Does that make sense? And then we're going to go through the program. So how I do that, of course, guys, I don't know which financial inventory sheet you use. I use this one.
That's the one we use.
Okay, perfect. I like this one, especially for training agents, because it forces them, team, to ask the monthly income question. I feel like when you're new, some agents really skate around that. They call me in home and I'm like, how much money do they make? They don't know. I'm like, what's their cash flow after they pay all their bills? I don't know. So that's really important, because at the end, when they tell you that they can't afford it, you're like, wait a second, Steve, after we pay everything, you have about $1,200 left. So even 10% of that is $120, which that puts you still below the national average. I'm actually underinsuring you. We got to do this today. So
like
it doesn't even put it down.
We're underinsuring you. We need to insure you.
Right.
That's good. I like that.
So that's part of it, guys. Obviously, Now, depending on kind of what Steve and Rob, the way they walk through their in-home with you or train you, this might not be for everybody. I know Millie Porcina, she's like, I don't do that. So everybody does their thing a different way. But I do ask, you know, okay, Steve, whether they're retired or still working, but I'm going to ask for all the sources of income after taxes. Okay. So if they're retired, which we see a lot of people who are retired, what are your sources of income, your pension, your any kind of disability income, your social security, etc. Right? So I'm getting that for the insurable person and the spouse if there is one. If it's a situation where I'm trying to replace income, that's very, very important. And I'll ask, are you guys familiar with Social Security survivorship, how that works? Ironically, I don't know what your experience is, Steve, but a lot of people that I sit with don't really understand that if the spouse who makes more of the money passes away, they're only receiving that difference. You know, it's not, they don't get to keep both incomes. And you guys are shaking your heads, so you obviously know that, right? But we have to educate clients, even if we assume, we can't assume they know that, because a lot of them don't. So right away, when I'm asking those income questions, what I'll do is, if Mary is going to lose $1,000 because her Social Security is higher, I'm on Mary's side, I'm going to put -1,000. Okay. Now, if something happens and the other spouse is up 600 because her pension, when she dies, he gets a portion of that. And let's say we figure out it's 600 for Steve's part, I'm going to add plus 600. All right. So I get that done first. Here's where it gets fun. Okay. So let's say together combined, their income is $6,000. Let's just say, for example, that might not be the average you see, but let's just say. So I'm like, okay, Steve, so we went over the mortgage. Actually, I'm not going to do mortgage because I feel like maybe a lot of you may not be running mortgage. So let's do final expense, or let's do something that's not mortgage. So let's say the income between the two is $4,000. And so I'm already asked the question, do you guys rent here or do you own? We do have a mortgage. It's $1,200. Okay. So what I'm doing, guys, is I write 4,000. Underneath that, I'm going to write 1,200. Okay. I'm like, okay, well, I already know your mortgage. I'm like, so what I'm going to do really quickly, Steve, I'm just going to get a quick cash flow scenario because I want to be able to understand your situation as thoroughly as possible. I just want to know, after you and Rob pay all your bills, after everything is said and done, how much realistically do we have left to budget for something like this? Does that make sense?
Yep.
Yeah. All right. And I'm like, so, okay, I'm assuming generally most people do, how much is your auto insurance? So let's say, $120 a month, car payments, etc. So we're going through all the major stuff. Okay. Now, some people might say this is overkill, but honestly, I've got it down to a science. It only takes me a couple more extra minutes, but it really comes in handy when I find out that they're paying $160 for cable and internet, and they have no life insurance. Like, what? GoFundMe is not an option here, right? So let's say we go through everything. I'm asking about credit cards. What kind of debt do you guys have jointly? So Rob, if you pass away first, does Steve have any debts that he's still on the hook for, and vice versa, right? So we're knocking those things out. Do you have, if they just moved into a house, I'm like, you guys have any furniture financing payments, anything like child support, alimony, stuff like that, right? Like, this is real life. People have those. So we're going through everything. And then I'm asking, last question is always, my last question is always like, okay, and approximately how much do you spend on groceries a month? Because initially I didn't ask that question and everybody was like, well, you didn't add the groceries. So I'm like, all right, let me just add it in. And for most people, it's $300 to $400 a month. So I always, like, if they say 300, I might go a little bit more. But that way, so we have the whole cash flow, guys. Everything, the whole picture. If they have life insurance, I'm like, Rob, you said that you have a life insurance policy earlier, right? And you said it was not through your job. So how much a month do you pay for insurance? Say Rob's like, $120. Okay, perfect. Now I know at that point, a lot of you are going to want to dive into, Well, what kind of policy is that? Can you go get it? Refrain. Okay. Just wait a second, because this is not the time. We want to get the cash flow stuff first. So let's say all things equal, we got the cash flow. I know that between Steve and Rob, after they pay all their bills, let's say we got about $800 left a month. Okay. They pay everything. Next, I'm going into medical conditions, heart attack, stroke, cancer. You guys all know that. Now, here's where we're at with the inventory part about what do you have to offset the mortgage when you die? Okay, so Steve was asking me, you know, how do I uncover, guys, annuities, or maybe they have stocks, 401k, etc. You really don't need to be good at this, at sales, or be a veteran in this business, because it literally asks you, what do you have to offset the mortgage when you die? So a way to position that is that once we inventory everything, I will skip here first and I'll dive into, okay, Steve, Rob, you said you were paying $120 a month for your life insurance. What type of insurance is that, Steve? Is it a permanent policy? Is it temporary? So let's say Steve is like, well, yeah, you know, it's a term. Some people know, guys, some people don't. I'm like, you know, this is a time when you ask them to go ahead and grab that policy, because if we don't have it in front of us, guys, we're just talking numbers and we don't have anything concrete to show them. We want to open up the policy and show, wow, Steve, so you're 60 today, but do you see what it's going to do at 80? Or do you see what it's going to do in 5 years? This thing is going to balloon out like one of those mortgage loans, and the $120 a month you're paying for it, Rob, now you're paying $2,000 a month. Wow, right? So it's pretty shocking there. So that's easy enough. We know what we're going to do there. Now, aside from the life insurance that you guys have, what else do you have in place right now that would offset the mortgage if one of you guys died tomorrow, that you guys could liquidate easily? And then be quiet, okay? If it's awkward, look at your paper. You don't want to stare at them because that's challenging. So, you know, wait for them to respond. Things we're looking for, guys, is any significant savings accounts. I learned this from Steve and Rob. We can reallocate that, right? That money that they're saving, we can reallocate that into a policy. But then that's where we find out about the annuities and all of that. Do you want to stop me, Steve, at any point?
Wow.
I feel like I'm rambling.
I think you just taught like a tremendous lesson on in-home, which is incredible. What I love is, you know, if you look at life insurance and you say black and white, someone fills out a form, they need life insurance, and you go and sell them life insurance, that compared to the three-dimensional dynamic that you just created in the house is the reason you're a Hall of Fame producer.
You know what, guys? I feel like I've taken a lot. Like I've asked Rob a lot of questions on his in-home. I've asked Steve. And you know, I've learned things. Here's the thing that's cool is like you take things from top producers that you like and you can repeat in a home and, you know, make it yours and something that works for you. And there's things like I never even thought of, like when Rob says, you know, did you do purchase or a refinance? How much did you save on that refi? $300? Okay, cool. We're rolling that into a HMS, you know, policy, something like that. So, the great thing is, Steve, is this really is just a lot of trial and error and probably getting told no a lot and saying, okay, how am I going to eliminate this for me? Because on the back end, if I'm getting told I want to think about it, I myself need something concrete that I can hit them with between the eyes. And that's usually for me, like the money part of what they're spending, how much money they have left, and then building up the need that way.
Wow, that's awesome. You're literally loading up your gun to make sure that you have ammunition throughout the appointment where they can't give you the I need to think or what have you, because you're telling them what their loss is, essentially.
Yeah, we need to make it really difficult, guys, that at the end of the day, they're just, you know, it's the difference between A, B. If I usually show maybe 2 plans, maybe, you know, if it's final expense, maybe 3, but we need to build up, guys, a good enough this is like your ammo, like Steve said. We got to load all of this stuff. So when we turn it over, we build out the plans. You know, Steve, which one is going to give your family the most peace of mind? Which option is going to be the most comfortable for you guys to do today? All they need to do is tell me one, because we literally try to eliminate everything.
That's amazing. Well, we try to keep this to 30 minutes. I could listen to you for an hour because you are amazing at in-home and so many other things. Tell me this, last thing, for a new agent today with the landscape of Family First Life, give one thing that you'd say to them to kind of take away from this and going into 2021 here.
One thing that I took away from 2020.
One thing for new agents to kind of, lean on for this coming year. If you were a brand new agent right now.
Get good on the phones, guys. This is like what I hit home to my agents every single day that's ringing in their ears. You guys, you've got to get good on the phones, because it doesn't matter if Steve and Rob say, hey, Orlando, here's 1,000 leads. Go make it rain, right? And I know you're going to, because I see your numbers. But, it's not going to do us any good if we have leads and cannot call them. So you guys have to really understand, and maybe some of you guys are good on the phones. I was not when I came over, and that really kept me from I was doing 20. I could have probably been doing 40 earlier, but I did not have that tenacity on the phones. And I know Steve has it, so really learn from the top producers, learn from your mentors who are in the top, like 2% of the company. Well, Steve was like number 1 last year. But, really use them and lean on them, because they want to help you. You know what I mean? But you have to get good and understand that being on the phones twice a week, if it takes you 8 hours to book your appointments, you have to do it. There's no more going out with 4 appointments anymore, guys. Because guess what? 2 are going to no-show you. 1's going to say no. 1 might not have a bank account. Now we're back to 0, So really please focus on getting good on the phones. I have a phone script that I created for the internet leads. I can send that out to you guys. I try to get on and off the phone as quickly as possible, because New Jersey will crucify you on the stake. I mean, they're brutal, but it works. And that's one piece, Steve, that I would say is just the phones.
Awesome. Wow. Well, I would say this: if you are going to be at the convention where Brittany's going to be, seek her out, please, because clearly she knows exactly what she's doing and is very good at it. And I really appreciate you hopping on, and I also appreciate you helping my mom out in the office.
I'm honored. I don't know what I could honestly offer you guys. You're being mentored by Steve and Rob. It's funny, Steve, because I think Ed Terrell called and he said, oh yeah, you're going to be approaching the $1 Million Club soon. And I was like, So it took me 3 years to take Steve 1, but I'll take it. But you guys are learning from the best people in the industry, and not only at FFL, but in the industry, guys. Nobody's putting up numbers like Steve and Rob. So I would just say take advantage of that. There are people that would kill to have 20 minutes of their time. Take advantage of it. So thank you guys for having me. I really appreciate it.
We appreciate you, Brittany. Best of luck to you and your team.